Hey everyone, Kurt Yaz here, and on this episode we're going to be talking about what the heck an HSA account is and why you might want one, and also how the heck can you get one. So let's jump into it. Number one, what is an HSA account? Well, a health savings account, or HSA, is essentially an account that the government, the US government, defined back in 2003. They actually introduced this. It's an account where you can actually put in a qualified amount of money and you can contribute this money tax-free. You can then use the money in the account for any qualified medical expenses. Now, if you go to the IRS website, we'll talk about this a bit more. Things like menstrual products can be used for this type of an account. Always check with your accountant. I'm not a CPA. This is not financial advice. It's just for entertainment purposes. But the point being, there are some really brilliant things here. And whenever you can have an account where you can contribute tax-free and you can actually buy investments with this account, you can then draw from it also tax-free. It's huge. Now, keep in mind, again, this is only for eligible medical expenses, but also keep in mind, as you age, as you get older, you're going to need to pay for more things that are medical. And over time, medical expenses can be one of the biggest expenses you have in your life. They ultimately probably will become. I found it very kind of discouraging. It sounded almost sort of tacky to me to have a health savings account. I had no idea that this was what it really was. And largely because as I was going through looking at what a HSA was in the US government, that in order for you to have an HSA account, you actually have to have what's called a high deductible health plan, an HDHP. Now, that sounds misleading because a high deductible health plan doesn't necessarily mean it's really that high. Now, in my case, here in Texas, Blue Cross Blue Shield, my plan's deductible went from $1,500 for the year to $3,000. That's right, $1,500 difference. And then I was eligible to actually open an HSA. Now, what is the big deal here? Well, if you think about it, right, there's several tax advantaged accounts, right? You have a 401k. That's where you contribute tax-free. And before you even get paid, you put money and defer money into an account to grow tax-free. But when you draw on that account, you eventually will take assets out, sell off things. You'll be paying taxes on that. You have a Roth IRA. Now that will grow tax. It'll be paid on taxes up front, and then you'll contribute to it after tax contributions. But then when you draw from the Roth IRA, you won't be paying taxes the way you would with a 401k where you deferred the taxes first. So I know this is kind of nuanced, but with an HSA, the way you can think about it is it's a health savings account, but it's really an account where you have a limit of $3,650 in 2022 and $3,850 for 2023 as an individual, where you can contribute up to that amount of money and grow that account, both contributing it tax-free on the in, and when you use it for medical expenses, tax-free on the out. Think about every time you go to an office visit and you pay a copay. Anytime you have to run to the urgent care and you pay that $80 or $100 for the visit for the urgent care. These are qualified eligible expenses that can come out of your HSA. And when you use tax deferred money that goes into the account without paying for taxes and comes out of the account without paying taxes on it, you're getting about, depending on your tax bracket, anywhere from 15 to 40% purchasing power. You're really increasing the amount of money you're able to spend on the account. And on top of that, when you put the account to good use and you have it well directed, whether it's with a portfolio, because what these things do is they're actually accounts where you can buy investments, you can buy different things, like whether it's a straight stock from a company that you believe in or an actual fund or an ETF, you can actually direct these funds. Now, I would definitely work with someone professional, a financial advisor or something like that. But the bottom line is this thing can grow tax-free on the way in. You can contribute to this. And then whenever you need to use the funds to sell off assets, you're also going tax-free with the usage of the actual thing. So, and that is tax-free growth. Again, think about this. Say you buy Tesla stock at $100 and it goes to $150. Well, normally you would pay what's called capital gains tax when you draw out on that and you sell the stock to use it for cash. With an HSA account, it grows tax-free. That means you do not pay capital gains taxes on your HSA growth. But there's a catch, right? You've got to limit your contributions annually. You can't go over the limit. You can't just dump all your money in this type of account. And also, it's qualified expenses for health. So it has to meet both of those requirements. So it's really good for someone who's planning for their health, right? For the long run, right? If you're going to spend money on copay, visits, maybe contacts, things like that. And if you look at the IRS tax code, a lot of those things are qualified. So there's a lot here in the HSA that I would highly recommend you check out. Who would want to do an HSA account? Well, I think a lot of people are going to fit really well into the category of being a great candidate for an HSA account. Really anyone that has a really expensive medical condition or pre-existing health condition, probably that's where you need to be more careful. And maybe the tax savings on that $3,600, $3,800 contribution isn't worth the fact that you'd have a higher health insurance deductible, because now you're going to be paying for more of your medical care because you already are in that category. But if you're someone that's healthy, you just have health insurance, there's a lot of people in this category, then now you can literally start building this massive nest egg of medical capital to take care of your health and then pass on to your family as a well-being sort of nest egg for them. And that's where this thing is really beautiful. If you spend a lot of money on health insurance, then this may not be the best fit for you. But if you don't spend a lot of money on health insurance, then this can be an awesome choice for you. And you do have the choice every year, typically, to rechange up your insurance and go to a low deductible insurance. If you decide that, for you, you thought you were going to be on a higher deductible and now you're on a lower deductible. So there is that as well. So again, why would you get an HSA? Well, you get an HSA because you're deferring tax on your money into something that you are growing tax-free, that you can draw on tax-free. That is massive. You just don't find that. There's really only a couple of other things like the college plan. So why would you want to do this? Well, there's really a huge tax savings here. As you build your wealth and you accumulate more assets and capital and income, one of your biggest expenses is going to be taxes. And so when you're growing your assets and you're buying assets, you pay a capital gains tax. You will draw out of like a 401k and pay taxes on that. So when you can do this in a health savings account, it's really something to consider taking huge advantage of. So how do you set up an HSA account? Well, number one, like I said, make sure that your health is not going to cost you a lot, right? Like make sure that you don't have the needs to have a low deductible insurance. So that's the first thing. Number two, and this goes for your family, obviously, if you have a family under your plan and you're the sole provider and that insurance plan covers everybody, you want to be mindful of that. But again, if you're healthy and you're not spending, thousands and thousands of dollars every year on health insurance premiums for things, then it's likely that you would qualify, you'd be a good fit for a higher deductible health insurance plan. And in that situation, again, we're not talking about necessarily raising your copays or even taking on more expenses for prescriptions, things like that. But it's really about, okay, I just need to make sure that my insurance deductible goes up to a certain amount, which again, could go from like $1,500 deductible to $3,000. So when they say high, I also think that's a bit misleading. It's certainly one of the things that kept me from actually jumping in from the sidelines. But if you fit those requirements, then the next thing you want to consider then is really setting up the account and picking out an option for you. And your employer may be the best option for you. You've got to make sure first that your employer can help you with getting a higher deductible insurance plan, what we call a high deductible health care plan, HDHP for short, and making sure that it's HSA, it's qualified to work with an HSA. And then your employer may provide you options directly that they work with as a company. A lot of larger companies will offer that. But you can also do an individual plan, and there's a few different ways to go that route. The two biggest options that I've found are Fidelity, which offers a direct HSA account. If you have a Fidelity account, great, that might be an option for you. Or a company called Lively ME. And Lively ME then connects with a couple companies, Devenir, which is kind of like a portfolio company that creates their own funds that you can then, contribute into your HSA, and Devenir would create some pre-existing funds for you to buy and would have certain growth projections, et cetera. But then you could also connect it with a Schwab account as an HSA. And so now through Lively, which by the way, if you do the individual plan, It's not going to take it out of your payroll, but it will take it post payroll, which you'll kind of contribute to it like you normally would following the rules. And then at the end of the year, you'll get a form. I think it's a 1099. Again, no, not tax advice, not legal advice, financial advice, but talk to your accountant. But then once you get the form, you can then go to your accountant and they can back adjust and file your taxes accordingly and go, hey, you contributed this much post-tax. What's the tax benefit you get here? And how does that sort of calculate into what you still owe in taxes or get as far as a refund goes? So sounds kind of complicated. The bottom line, if you're healthy and you're interested in an HSA account, it's not going to necessarily put you in a really bad health insurance plan. And it gives you a huge opportunity to actually start investing and growing a nest egg of medical savings that you can then allow to grow tax-free. Again, growing tax-free, and all the things you spend money on in your medical expenses, copay, prescriptions, some things. And this list of things the HSA account covers is quite vast. I mean, we're talking things like abortion. We're talking about like acne treatment. There's things on this list like adoption physicals for the parents that you're looking to adopt from, glasses, diapers for adults. It's a lot. And so again, a lot of this stuff could be potentially things you're already spending money on. And now you can use this account that you're growing tax-free, that you're contributing into tax-free, and you could potentially use it for that. So again, it's there's a big list. The cost of insulin, for example, is reimbursable. But you do always, before you go through this list and you confirm things, check with your accountant because you're going to have to verify which of these expenses. But just thinking, right? Anything generally that would be like sort of like a necessary medical expense to go through your life could be there. Not cosmetic things, right? Certainly things that contribute to your health. I mean, just the other day, right? Like over-the-counter medical medicine, drugs, things like that, retainers. There's so many things in this list. So again, HSA account, it's a huge hack to make money, to save money. It's really a generous thing that the government is doing, and it's a justifiable thing because you're spending it on health things that really keep you healthy and a productive member of society. So I hope you enjoyed this video. If you're new to the channel, it's brand new. I really appreciate the support, and if you made it this far, holy cow, thank you so much. Hit the like button, comment, subscribe. I've been a YouTuber now for about 3.5 years, but this is my real core baby of a channel that I'm going to be working on growing. And I'd love to hear your feedback on what kind of content you'd love to hear next. If you have experience with HSA, please comment below. And thanks a lot for watching. See you on the next one.